Hello everyone, welcome back to the channel. I hope you're doing well. In today's video, I will be covering the procurement cycle. As a sourcing specialist, this is something that you would be managing day in and day out. It is going to be your bread and butter. A typical procurement cycle comprises of 10 steps, and I will be going over them one by one in detail. So let's go. Let's get started.
A typical procurement cycle starts off with need identification. This step falls in the ambit of the end user. The end user has to determine what, when, and how much of an item is required, for which reference is made to the current stock, the stock that is in pipeline, and future requirements. Once it has been established that an item is required, the end user moves on to the next step, which is PR initiation and approval. PR stands for Purchase Requisition. It is a formal document which contains details of what, when, and how much of an item is required. It also includes an estimate of the price of the item that is required. The estimate could be based on the last purchase price. It is just an estimate, not the final value. Once the PR has been initiated and gone through the approval process, it lands in the supply chain department where the formal procurement cycle kicks off. When a purchase requisition lands in the supply chain department, the procurement manager assigns it to a sourcing specialist. The sourcing specialist goes through the purchase requisition in detail and then comes up with vendor selection approval criteria. There are a couple of decisions that have to be made at this stage. The sourcing specialist has to come up with the go-to-market strategy. If the sourcing specialist decides to process the case on a single source basis, then the next one, two, and three steps would be bypassed, and the sourcing specialist would proceed directly with order award. However, if the sourcing specialist decides that the requirement uh, can be fulfilled through competitive bidding or spot bidding, then he or she would come up with a list of vendors who would be approached for fulfilling the requirement. In tendering, the sourcing specialist sends out RFQs, requests for quotations, to the vendors who have been shortlisted for fulfilling the requirement. The RFQ contains details such as what, when, and how much of an item is required, and the ask from the vendors is price, delivery time, and payment terms. The RFQ may contain the evaluation criteria. The typical evaluation criteria is technically acceptable and commercially lowest. It is the standard in most cases. However, it could be a hybrid where certain percentage could be attributable to the technical side and the remaining percentage would be attributable to the commercial side. The RFQ may contain other terms and conditions that would enable the vendors to come up with the best possible offer. Post-tendering, when the sourcing specialist has received quotations from the vendors, the next step in the procurement cycle is evaluations. This step, by far, is the most critical step in the entire procurement cycle, and it is the most time-consuming as well. Evaluations can be broken down into two parts: technical evaluations and commercial evaluations. In technical evaluations, the sourcing specialist shares all quotations with the end user for feedback. These quotations are shared without prices. The end user goes through these quotations in detail and determine if what is being quoted by the supplier is in sync with what is required. Once technical evaluations have been completed, the next step is commercial evaluations. In commercial evaluations, the sourcing specialist has to prepare a price competitive sheet. This sheet consists of price, delivery time, and payment terms quoted by each vendor. The purpose of price competitive sheet is to determine the technically acceptable and commercial OS vendor for negotiations. Once evaluations have been completed and the sourcing specialist has determined the technically acceptable and commercial OS vendor, the next step is negotiations. Negotiations is a subject in itself, and I would be covering it in detail in my upcoming videos, so stay tuned for it. In negotiations, the sourcing specialist reaches out to the supplier via email, in person, or there could be a combination of both. And the sourcing specialist asks for improvement in price, delivery time, and payment terms. In price, the sourcing specialist could ask for a discount. In delivery time, the sourcing specialist could ask for shortening the delivery time. And in payment terms, the sourcing specialist could ask for converting the payment terms from advance payment to letter of credit or cash against documents, or in ideal scenario, net 30 days. Once there is an agreement between the sourcing specialist and the vendor on price, delivery time, and payment terms, the sourcing specialist moves to the next step. After getting approvals from relevant authorities, the sourcing specialist proceeds with order award. In order award, the sourcing specialist issues a formal purchase order. The purchase order consists of the reference number of the original quotation, the items that are being ordered, the price, the delivery time, and the payment terms that have been agreed, the delivery address, and any fines and penalties that may be imposed in case there is a breach. The purchase order is then sent to the vendor via email or by post, or it could be sent by both ways. After issuing purchase order to the vendor, the sourcing specialist takes the end user in the loop. The sourcing specialist shares a copy of the purchase order with the end user. The end user goes through the copy of the purchase order and extracts the name of the vendor who would deliver the required item and the estimated delivery date. The end user uses this information to manage all the prerequisites associated with the delivery of the order. The supplier then delivers the item at the given delivery address, which could be head office, plant, or some field location. And once the item has been delivered, the inventory management process kicks off. In this process, a representative of the end user goes through the item that has been delivered and confirms that it is in sync with what was mentioned in the quotation and the purchase order. And if it is in sync with both documents, it is accepted and taken in inventory. If it is not accepted, if there is a discrepancy, then the item is rejected and it is returned to the supplier for further necessary action. The last step in the procurement cycle is invoice processing. This step falls in the ambit of accounts payable. So once an item has been delivered and it has been accepted by the end user, then depending on the payment terms, the payment process would be initiated. A simple example could be payment on 30 days, where payment has to be made to the supplier within 30 days of the item being received at the given address. The accounts payable team uses a three-way matching principle prior to making payments. They make sure that what is mentioned on the invoice, uh, purchase order, and the delivery order, it's exactly the same and there is no discrepancy. If there is no discrepancy, they proceed with payment as per the payment terms. If there is a discrepancy, then they would reach out to either the sourcing specialist, the end user, or the vendor to sort things out prior to reinitiating the payment process.
Hope you liked the video. If the procurement cycle is managed in a different way in your organization, and if there are any steps that I have not covered, please let me know in the comment section. If you derived any value from the content, please like, share, and subscribe the channel. I would see you in the next video.